You're listening to the Valley Current.
So let's say you have 100 million, and let's say you screwed up the 5-year rule, or you don't like something else, whatever it is that you don't like, maybe because the date was wrong or the date was early and you have to pay some tax. You could decide to say, well, I'm going to actually create $10 million investments in other C corporations that I believe in. And then here's the kicker of the question they asked me, which I called a bunch of stockbrokers and they didn't have the foggiest idea. I said, is there any qualified small business stock that's actually traded on NASDAQ or the pink sheets or anywhere where their asset value is different than their enterprise value? Because those are two different concepts, right? And the guy said, that's a good question. I don't know. And I thought to myself, there should be a stockbroker that just specializes in this stuff, right?
Right. And there isn't. Unfortunately, there isn't.
Right, because if you actually said to someone, look, there's 100 stocks that fit the category, maybe they trade thinly, maybe they're not, they're not the next Microsoft, the next Google, but they provide a place for you to put the money, and maybe they're growing, maybe they're not. And you could start to decide to look around then once you put that stock into the target, the 1045 target QSBS, and then you hold it for 6 months and you figure out what portion you should move to the next one, right? Or maybe you start your own company because you're a serial entrepreneur and you want to actually do that, right?
There you go. And so it turns out that you can start your own company. And there's two flavors of that. One flavor is you're a serial entrepreneur and you start doing R&D to develop an operating business. Then flavor number two is you start an acquisition vehicle. So you make your own qualified C corporation.
Oh, so you're saying just start a new C corporation, fund it with, say, in the case I just gave, the guy's worth $100 million. He just got $100 million of cash proceeds. He doesn't want to pay taxes. He is a serial entrepreneur. He puts $10 million into a C corp, and then he takes his time to find out, what am I going to acquire to bring into this company, right?
It can't take too much time because he's got 60 days to establish documentation that 100% of the investment is fully utilized for its intended purpose. So he needs a business within 60 days. He needs to document a business plan that includes the full utilization of that $10 million.
So you're saying there's actually a short window, not unlike the 1031 area.
He has to dot his I's and cross his T's on that. And there's a slight level of risk about having a buffer company between the money and the operating business. So obviously having an operating business is the safest approach from a tax risk standpoint.
Right. But again, that 1045 target will not shield California taxes on that 10 million, right? So
for California, the critical distinction is whether the money, the original money in the original corporation was compensation or capital gain from sale of equity.
Capital gains.
And as long as none of it is compensatory in nature, then California's jurisdiction is based on the date of residence on the date of sale. So there's the opportunity to leave California and be a resident of some other state.
Right.
But then there's a whole bunch of cautions in terms of landing successfully in the other state for tax purposes.
But let's take the case where they stay in California and they're going to start a new startup in California and they've targeted the C corporation, whether an existing idea or something to be acquired within 60 days, as you recite. California, again, doesn't treat just the way 1202 is irrelevant to California. 1045 is irrelevant too. They're like, who cares? Pay your capital gains. Shut up, right?
Right.
Isn't that the outcome? I mean, they're not.
California needs to fund its infrastructure somehow. And
right. I mean, look, the federal government gives some real incentives for entrepreneurship. This is two of them. There's a third one, which we touched on in a previous show, which is this idea of moving the money to an economic opportunity zone investment and riding that long, because you actually take appreciated stock proceeds, the cash from it, put it into, it's a little bit like a DST in a way. It's essentially hoping that some manager of an economic opportunity zone fund does the right projects and follows the right rules and make sure all I's are dotted and T's are crossed, so that after 10 years, you can get essentially tax-free treatment from the federal government, but not California. It's the same thing. I don't think California gives you any sort of economic opportunity salvage from the state taxation that they would do. I think they would just say, pay your taxes. And that's why, in many ways, a lot of entrepreneurs looking at starting a business, and they're starting it in Delaware anyway, start asking in a virtual world, well, why do I need to be in California? That's just an additional burden on the company at the point of exit, and maybe even at the point of operations, because of the cost of people and cost of benefits and regulatory red tape and a million other things. So you see a lot of these companies going to Texas or coming to Florida or coming to Nevada, because that's another non-tax state. What is there, like 7 or 8 non-tax states at this point?
I hear comconflicting information on that. So some people are saying that there's an influx into California that compensates for the outgo. But as a practicing CPA, I think I've seen more outgo than influx.
Well, the influx tends to be, and I'm not going to say it in a pejorative way, but it tends to be foreigners. I mean, it tends to be people that get into Stanford or Berkeley or Santa Clara University or San Jose State. I'm not negating them. I think they do wonderful work. I mean, some of them are running the biggest companies in the world. Google is run by such a foreigner, an immigrant, essentially. I think Microsoft is as well. I hope I'm not speaking out of turn here, but I think some of these bigger companies have seen foreign talent as an advantage compared to American talent. And the part of it is that when you talk to people that are coming in, when they come in on the educational visa, they like plan to stay. They'll tell you while they're in school, hey, my plan is to start a company and to get a visa as an investor or as an entrepreneur or whatever way they can do it. And maybe the previous administration, what's now called the other guy, I guess, is the term people are using for him. They don't even want to mention his name. Maybe he was trying to put a stop to it, but I don't think the current administration has that view at all. I think it's sort of, let's open up immigration and see what it does to improve the voter count for the Democratic Party. That's one way to look at it. I'm not against that. I'm a Democrat.
Well, my hope is that the immigrants who, my family is descendant from immigrants in Europe, and I hope that all immigrants who come here and benefit from the system stay long enough to contribute back to the system and pay taxes. And of course, I have an incentive to encourage people to pay taxes. Now, if you want to look at complete tax evasion, let's talk about Bitcoin or cryptocurrency. And maybe the enforcement there still isn't enough. That I see hardly any Bitcoin tax returns. I don't think these people are paying their taxes.
Right, because they have this doing a lot of transactions. A lot of people trade this stuff and they move from one to another to another. There's like on Coinbase, I've got to believe there's like 100 or maybe a couple of hundred different types of coins. And there are people that watch that like the equivalent of FX, the equivalent of currency exchange. And they're kind of viewing cryptocurrency as like the next big thing to chart and graph and issue options on.
Hardly visit the gym or the golf course or Shaper without finding somebody telling you what new coin to invest in.
Right, because it's like eye candy, it's like the eye candy of the month. And then there's these influential people like Tesla's CEO, Elon Musk, that say, hey, I'm taking Dogecoin or whatever he said he was taking to buy Teslas and the like, and people can buy it with a coin.
Doggy.
Okay, I thought it was Doge, but maybe you're right. Maybe it's Doggy because there's a dog image on it. I mean, it's a weird kind of world at this point, and it seems to be accelerating in the way digital assets are moved around. And of course, the tax folks are probably way behind in terms of their digital capabilities, though they'll catch up at some point. And the real question is, do you have a good advisor like Steve? Because you know the ins and outs, and you know, like, even this idea of, hey, combine 1202 with 1045 on your stock and figure out where you want to put some, where you want to put another, and do something smart with it, as opposed to paying, every last cent of tax. You'll pay whatever taxes are due. It's a little bit like a person that you see in the real estate field that'll say, hey, combine, if you're selling your residence that became a rental, 1031 with section 121. Combine those two things together, because you're a married couple and the first 500,000 of gain is tax-free, at least federally, right? Does that work? Does 121 work from a state point of view?
So, yes, it does, in general. So you mentioned being a married couple, and you definitely want to be sure that your spouse is aboard and that your spouse has signed the applicable papers. So
right.
The IRS has, in some cases, come in and said, well, there's only one spouse signature on this, so we're only giving you 50% of the treatment you desire.
On the real estate?
Yeah. And specifically on the 83B.
Okay.
So the 83B election has to have both spouse signatures. And it should also say for AMT purposes. So for both ordinary income and AMT purposes. Some of them don't. But back to the bigger picture is that some people take vitamins. Other people prefer to wait until things get bad and then pay for surgery. And I think for my clients, and probably for yours also, we help the people who are willing to do a little bit of planning in advance. If you come to us after the fact, there's a lot less we can do, and it's surgery time, and you'll end up paying a lot more.
Right. I think what you find is that people who think of going to lawyers and accountants think that I'm easily going to spend $5,000 to $10,000 to $15,000 to $20,000. And they often think to themselves, the deal is not really done yet, or, maybe it won't happen. And, they don't realize that they could do probably a very smart minimum consultation to at least get started, and then turn that into the full-blown, hey, this deal is real, let's really take it seriously. And it is a bit of coordination because, by and large, a lot of clients need a lot of education. This is just really scratching the surface. But we covered essentially 4 different things in 2 different asset type classes, which is when you have stock in a startup or some other small business, and it could be venture capital too that put the money in, or angel investment. You got these 2 provisions, 1202 and 1045, understudied. The market is underdeveloped. There aren't a lot of brokers that know about it. There aren't a lot of people that know about it, but it's worth investigating. And then on the flip side, in the real estate, you have these other 2 provisions, which are 1031 and 121, that deal with when you decide to do some type of exit from the piece of real estate. Where do you place the proceeds, and how much can you take in cash, and how much do you really have to make sure goes into the target, and what's all the timing on that? So there's a lot of nuance there. Yeah,
there's a lot we didn't cover. One thing that is quite big that we really didn't dig into is debt associated with these instruments. And that's a very interesting piece of the deal. And
right,
it turns out you can roll that into, or even stock that's financed with borrowed money. So you can roll associated debt. And it turns out the IRS is very generous in what it considers associated debt. So you can even roll accounts payable into a 1031 and possibly into a QSBS.
Wow, so that's something we have to cover on the next show, because even I'm not familiar with that, although generally I've heard about it, although I haven't seen it actually occur in the 40 years I've been in practice. Sounds like you've seen it and
I've done it.
you're ahead of me.
Yes.
So, Steve, tell people how they can contact you. We're still in kind of the quasi-virtual environment. I mean, you and I both have offices, but I don't think people are generally going to offices these days. Every time I talk to lawyers, they're like, why do I need to go to an office? Well, I have a meeting with a whiteboard. They're like, just do it over Zoom. Who wants to deal with the commute? We can cover it. It's interesting. We tried a case last week. I was in California last week, but I had very little time. So otherwise I would have bought you lunch, Steve. We tried a case in San Jose. It was the whole week. We started Monday, went right through Friday. I jumped on a flight. So another 5 days in California. If you're looking at the tax bird calculator, it keeps track of all this stuff. But in general, the judge was very careful. People were wearing masks. It was not the same regime. And it was very clear that people had to stand like 10 feet apart. It's a different format for how cases are going to go forward. And I don't know, it wasn't a jury case, it was a judge case. I don't know how the jury boxes are going to be organized. There's a jury trial in San Jose going on right now in a different courthouse against the CEO, Elizabeth Holmes, of that blood analysis company, Theranos. And they've got something like, 18 jurors. I don't know how they're seating those jurors. I mean, actually, if I had time, I was going to go over to that courtroom to kind of figure out what the heck was going on. I didn't have time, but I'm guessing they must be using the ceremonial courthouse, which is a bigger courthouse in that bigger courtroom in that courthouse. And they must be separating the people by 10 feet. And I understand there's a bunch of plexiglass that's been put up. And so it's a whole different world that we're in now with this variant. So tell people how they reach you, because it is probably initially a virtual contact in any event, right?
Yeah, sure. So my cell phone is 408-887-6433. My email is srabin@srabin.com. That's S for Steve, R-A-B as in Bravo, I-N.
Right, and that takes you to a great website too, because you have the website that says tax problem solved, which is kind of a good line. I've said you should probably try to get a trademark, but maybe it may be a little bit too generic or descriptive to get it, because obviously you're one of the great people in Silicon Valley, and if you are a founder and you're lucky enough to have an exit coming, or maybe it already came, and you're sitting down kind of counting the money, and you have to start counting the taxes unless you get some advice from Steve about the right approach. And of course, it's always interactive because it depends on your risk tolerance. If you just want the cash to go into T-bills or something and clip coupons daily, that's a different deal than
this 1202 stuff is critical. VCs, capitalists, founders, investors, family offices, they all can benefit from this. And Jack can help with the legal, and I can help with the tax. How do people reach you, Jack?
So it's probably best by email initially, Russo, J-R-U-S-S-O, sort of like Steve, first initial and then last name, at Computer Law. It's all one word, computerlaw.com. The website is www.computerlaw.com. Of course, there's still a phone number. We have a receptionist. People do answer the phone, 650-327-9800. And I know from one of my recent startups that successfully sold, it just happened, it's all public information now, last week to Microsoft. And, pretty interesting negotiation, pretty interesting process, given it's all virtual, all handled over Zoom or WebEx or Skype. Of course, Microsoft is Skype, so they want to use Skype. But in general, these deals are happening without a lot of face meetings. It's hard to believe, but they're happening essentially in a digital environment for big money. I mean, I don't think the figures have been released, but it's not insignificant. And so now all of those people, and we're talking 200 plus people, because it had numerous employees and numerous shareholders, employees that became shareholders. There's a lot of people that probably should listen to this webcast, and that's the reason I wanted to get it out. And then obviously get the right advice. I mean, it doesn't have to be from me or Steve, but make sure you're not doing something stupid that I've seen people do when they're going to do something like serial entrepreneurship anyway, and they could shield some portion of that using the code provision that allows the placement into a new investment within the 6-month period. So obviously there's timing issues, there's other nuances that have to be investigated. So this is just a general overview. But Steve, thanks for spending your time. I appreciate it. I look forward to the next time I'm in California. I may have another trial next month. I can't believe, in this time of COVID and variants, the courts are cranking back up. It's surprising, but it's happening.
Thank you for having me on the program.
Oh, of course, Steve. Absolutely. You're one of my best guests. I appreciate having you. So look forward to seeing you next time I'm in California. I owe you at least lunch or dinner, and we'll plan that for next month, okay?
I've got a few bottles of wine for the occasion. I'll pick one.
Okay, thanks, Steve. See you later. Have a good one.
Tune in next time on The Valley Current.